A major shake-up is underway in the retirement advisory world, and it could reshape how billions in assets are managed. Creative Planning, a powerhouse registered investment advisor based in Overland Park, Kansas, with over $370 billion in assets under management and advisement, has agreed to acquire SageView Advisory Group, a firm specializing in retirement-focused advisory services. SageView itself manages and advises on a staggering $235 billion in assets as of the end of 2024, according to insiders familiar with the deal. But here's where it gets controversial. SageView has been majority owned by Aquiline Capital Partners, a private equity firm with a strong focus on financial services and technology, since early 2021. Reports surfaced in May via Citywire.com that Aquiline was actively exploring options to sell SageView, signaling a potential shift in the retirement advisory landscape. This raises questions about the growing influence of private equity in the RIA space and whether such moves ultimately benefit clients or primarily serve investor interests. SageView's roots go back to 1989, when it was founded by Randy Long, who remains chairman today. In a significant leadership change last year, the firm brought in John Longley, formerly president of SVB Private, to take over as CEO, replacing Long. When approached for comments on the acquisition, Long chose not to respond, and Creative Planning CEO, Peter Mallouk, also did not provide any statements before publication. SageView is recognized as one of the pioneering retirement plan advisor aggregators, alongside firms like Captrust and what is now known as Hub. Interestingly, Captrust was reportedly among the contenders vying to acquire SageView, adding another layer of intrigue to the deal. Since Aquiline's acquisition, SageView has been strategically expanding its wealth management services alongside its core retirement business, targeting firms in key geographic markets to broaden its offerings. Just last month, SageView announced it had acquired CAP STRAT, an Oak Brook Terrace, Illinois-based firm specializing in institutional retirement plan consulting and wealth management. CAP STRAT brings an additional $25 billion in assets, including $750 million in wealth management assets and over $24 billion in institutional assets under administration, further bolstering SageView's footprint. Meanwhile, Creative Planning has been aggressively growing its retirement plan advisory business over recent years through a series of acquisitions. These include Iron Financial's retirement division, Lockton's $110 billion retirement plan business, and Messero's corporate retirement advisory services. Today, Creative Planning's retirement plan segment manages and advises on more than $210 billion in assets across over 6,000 plans, according to information on their website. This acquisition highlights a broader trend of consolidation in the RIA sector, especially among firms focused on retirement plans. But it also sparks debate. Does the increasing dominance of a few large players enhance service quality and innovation? Or does it risk reducing competition and client choice? What do you think? Are these mega deals a sign of progress or a cause for concern? Share your thoughts below. About the authors, Diana Britton serves as the executive editor of wealthmanagement.com, where she covers independent broker-dealers and RIAs from multiple perspectives. She also hosts the Jesse H. Neal award-winning podcast, The Healthy Advisor, which focuses on the health and well-being of financial advisors. Originally from Los Angeles, Diana now resides in Rocklin, California. Alex Ortolani is a senior reporter based in New York for wealthmanagement.com, specializing in coverage of deals, personnel moves, and trends within the registered investment advisor industry. His background includes financial and business journalism, as well as media relations and corporate communications for technology companies and Fortune 500 firms. Patrick Donachie, also a senior reporter for wealthmanagement.com, focuses on federal and state regulations, litigation, and mergers and acquisitions in the financial services sector. Born in Staten Island, Patrick currently lives in Brooklyn, New York.